The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be reviewing the process, the headspace, the mindset, and the tactical approach to tackling the markets and bulletproofing yourself for success. One of the things I want to address today, mindset reset as well as a technical approach, is how many trades are you trying to take in a week? And the question is, do you understand the power of scalability? Meaning, do you understand that 90-10 opportunities that can be scaled into when all time frames are driving can far outweigh 50-50 trades, taking trades that can often get traders mixed results, but also get them trapped into market conditions that are 50-50, choppy, wishy-washy, could go either way. And those are the types of trades that can also do damage to our psychological capital. Do you understand the power of scalability, the ability to sit on your hands and hunt out setups that rinse and repeat, that show up weekly on different instruments, but the same approach, the same trading setups? Some traders like to take a lot of trades. Some traders like to sit and wait for one or two 90-10 opportunities that they can put size onto, one and done, walk away, come back, rinse and repeat the next day. So my question is, what easy money-making setup do you identify with the best and the easiest in the session that you're trading? Now, one of the signals that I like to look for is markets that close in breakout. This is a signal that can potentially alert me to an instrument that may be setting up in my session. Now, primarily for the purposes of this video, we'll be talking about currencies and the major pairs. Now, for the purposes of just demonstration of simplicity, we'll be looking at the major pairs, and obviously cross rates are optional for traders who want to look at this as an alternative for additional opportunities in their session. The whole point that I want to emphasize with this video is simplicity and reproducibility. One thing that I want to go over is the weekly template. There's been a lot of misinformation and confusion which overrides the underlying approach of simplicity. Cycles, sweeps, gaps, hunts, all these other things, blocks, that's great, but it's not reproducible, it's not simple, and it's very subjective. But Monday's day 1, that's every single week. Tuesday's day 2, and Wednesday's day 3 on the front side of the week. Now, just in simple terms, think simple. Monday is the beginning of a new week. Wednesday is the midpoint range of the week, and Friday is the close of the week. That is the same thing every single week. Simplicity, rinse and repeat. So instead of trying to figure out what cycle or what hunt or what gap a market is in, find the same simple, reproducible setups. Day 1, day 2, day 3. Day 1, day 2, day 3, backside, front side escalator, backside elevator, and rinse and repeat those same setups. Just find one or two on any instrument based on the same criteria. If we can identify a market that closes in breakout, markets only do 3 things. Now, there's a lot of repetitive, saying the same statements over and over again, but a lack of understanding of what this really means. Markets only do 3 things. They break out and trend, they break out and reverse, or they stay range bound in a trading range. But all 3 of these can apply to playbook best trading setups. Don't try and figure out what a market might do. What is it actually doing? Hindsight is understanding when a market has done something, what signals is it giving us? And when it gives us a signal, what setup does it give us? It's as simple as that. Rinse and repeat. Day 1, day 2, day 3. reset, day 1, day 2, day 3. Opening range, midpoint range, and the closing range of the week. We'll just start off with the Japanese yen, just to a simple example to demonstrate the three things that markets do. Now, we had a market that broke out and closed in breakout on Monday. So it's closed outside of the previous weekly high of week range. On Monday, day 1, our opening range of the week. Tuesday, day 2, stays inside of the opening range and closes as an inside day. Now we're in breakout, but that's the opening range. That's the opening range in a new week. Now traders may have went long in Asia, they may have shorted it in Asia, they may have went long in the US, but at the close of the day, we've closed in breakout. So remember, I'm coming to the screen and I'm looking at the information the market's providing me based on the close of the day. Now we've broken out, we've had a gap, and you'll notice the Wednesday, Thursday, Friday is a dump and pump into the new week. But for simplicity's sake, we're talking about markets that close in breakout. Now we have a market that closes on Tuesday, day 2, forming our opening range initial balance from the playbook. We talk about this, page 26 in the playbook. It stays closed in breakout. So we're still outside of the previous week's range, but we have an inside day. Now, Wednesday is day 3 on the front side of the week, and it also closes outside of the previous week's range. Now, we're above the high of the week. We have a double inside day. The inside day is on page 69 in the playbook. On page 74, we also talk about the double inside day. The double inside day can be an indication of a potential reversal or an potentially explosive move. Now, we have Bank of Japan that was tentative on the schedule, but I want you to understand something. We have a market that's closed in breakout. We have day 1, day 2, day 3. We now have 3 days of breakout traders in the markets. Do you understand? We're in a trading range, but we have 3 days that have closed in breakout outside of the previous week's high of week level. 3 days of breakout traders triggered into the market. Page 51 in the playbook. After the BOJ, we have a market that closes as a pin hammer at closing price on day 3. After the BOJ release, this is a 1-hour chart. We have a pin hammer closing at Wednesday's closing price, the midpoint range of the week. Day 1, day 2, day 3 higher closes, 3 days of breakout traders in the markets for the parabolic collapse back through the low of the current week and into the breakout traders from Friday's closing price, where the auction process starts from at the beginning of a new week. An example of a trading range, but 3 days of breakout traders in the market pending the BOJ release, an hourly time frame chart. Paul Tudor Jones, think of your entry price as last night's close. An hourly chart. This trade setup is driven by other time frame traders. Now at the beginning of that new hour, just in simple terms again, we have our universal entry criteria met. We have the option of entering in right at the close of the hour into the new hour at or better than closing price. We now have our worst case scenario extreme in place for our managed risk and a profit target of the low of the week level. It's a major fundamental impact driven event. Even simple way is just to take the high low of that pin and project a 200% profit target range expansion to be removing profits out of the market. And you'll notice that a 200% expansion of that high-low pin takes us just below the low of week level. The point I want to emphasize with this is simple, reproducible, and scalable. Just as an example, the problem with this, though, for most traders is that they won't sit on their hands and wait. Now, this opportunity came in the Asian session towards the end of the 3-hour window. For traders who are trading Asia, this was an excellent scalable opportunity on the Japanese yen on a market that had closed in breakout outside of the previous week's range, and we are at the end of a month. Now I'm prepared to sit on my hands and wait for higher time frame driven opportunities rather than taking lots of little trades. That's my approach. That's my mentality. Day 1, day 2, day 3. Not cycles, not blocks, not gaps, not sweeps, not hunts. Simple, reproducible, scalable, higher time frame driven trading setups. Now, I've mentioned before the inside day is a fantastic signal for session opportunities in terms of a high of day, low of day, or low of day, high of day opportunities, because we get false break reversals, and we also get trend trades depending if it shows up at the end of a week into a new week or at the beginning of a week. But my main focus are the 3 days of breakout traders in the markets, because that can present the escalator, elevator type of activity, whether you're shorting a market or you're going long a market. And oftentimes, depending on the instrument and the setup, it may be just an all-in session trade from, again, high of day to low of day, or low of day to high of day, or we may get high of week to low of week opportunities, the monkey hammer, and vice versa for long direction trades. Today we had the British pound collapse, and as I mentioned earlier, you can look at major cross pairs for instruments that close in breakout or are breaking out, and then having the patience and the understanding, front side, back side. The front side builds the box, the back side wrecks the box, as we say. We had a low of month level put in place on the 23rd of October. We're heading towards the last trading day of the month today. We broke Friday's low of day level and then broke the high of day level on the same day. That restarts our day count because we have an outside day, but we've also now triggered breakout traders on both sides of the market, but ideally on day 1, the opening range. We've actually traded back inside of the previous week's high-low. So we haven't expanded the range. What we've done, just in simple terms, is on the first trading day of a new week, we've actually triggered breakout traders short into the market on longer time frames, hourly, 4-hour, this is a 1-hour chart, daily, and that market's reversed and then broken the high of day. So in simple understanding, on a shorter time frame, we've triggered shorts and then hit the stops. Day 2, we've expanded the range on a new week. Now we've made new weekly highs, and that market closed in breakout. We triggered day 2 longs into the market, so we broke the high of day on Monday, of Friday's high of day, triggering longs on day 2, expanding the range on the front side of the week, closing in breakout. So going back to our chart, day 2 typically expands the range on the front side. Wednesday, the midpoint range of the week, we have a market that goes parabolic from high of day, high of week, to low of day in the London session before exploding and reversing in the New York window on major red news, U.S. news, pinning the high, and then collapsing back down, closing as a first red day, a day that closes below the open after breaking or peaking the high of week level first, closing as a first red day. So we have 3 days of breakout traders triggered into the markets. We have, if you'll just even pay attention to, on Wednesday, we have the break of the high, a second break of the high, and a third break of the high before collapsing down and closing as a first red day, heading into day 2 on the backside of the week. So we have 3 days of breakout traders in the markets, page 51 in the playbook. We have our first red day, page 58 in the playbook. Now, how does price behave on the day? Just really simple equation. We're looking for a 3-session setup. The market closes in range, and the next most important thing is, how does price behave on the day? Market breaks down before pumping up in our Asia-London window. And as I mentioned, I always talk about training your eyes to move horizontally. We have a low of the day put in place. We have major red news being released at 8:30. This is our 1-hour chart. So the important thing to recognize here is we have an opportunity after major red news to align ourselves with a first red day opportunity. And if we just bring Friday's high of day level across, actually I should say Monday's high of day level, it was higher, it broke out. Remember, breakout traders are in the markets. We've taken out Friday and Monday's high of day levels. We triggered the low of week level on Wednesday before pumping up. Now, they haven't taken out that low of day level made on Wednesday, we've gotten the low of the longs on the hourly time frame. They've broken that before pumping back up, one push, two push, and a third pin to the high. Our basic model for trade entry criteria, page 29 in the playbook, gives us a low stress, easy, one bar stop fill back inside of our EMA at closing price. Paul Tudor Jones, think of your entry point as last night's close for the collapse and now range expansion, targeting the low of not only the previous week, but a range expansion of the high-low day itself. We can project 100% expansion of this high-low on the day for the target outside of the low of week level. Now the low of the month, the last trading day of the month, 3 days of breakout traders in the markets. First red day signal, the midpoint range of the week, just like we have in the course PDFs, Wednesday signal day for the backside. Beautiful parabolic first red day trade after major red news, after New York Open, taking out the low of week level on the British pound. The NASDAQ is an interesting example for traders to study. We have a couple of things that contribute to this being a template that is built over a week and a half. Wednesday put in the peak formation low. We had an inside day on Thursday and a parabolic move taking out the high of the month on Friday. The market closed in breakout on Friday, breakout of the previous day, not the week itself, but of the previous day, the inside day. Monday was again an inside day, and you'll notice higher high, the dump and pump, day 1, day 2, day 3. On Tuesday, a 3-day setup into the New York Open for the parabolic move back through the high of the week. So we have day 1 breakout traders in the market on Friday, day 2 breakout traders in the market on Tuesday on the front side of the new week, and day 3 longs triggered into the market on Wednesday. Day 3 on the front side of the week, an hourly chart, 1 push, 2 push, and a breakdown collapse parabolic move into the close for a first red day signal on Wednesday. We have 3 days of breakout traders in the markets. We have a first red day signal, a market that breaks higher first before closing below the open into the high of the week. We have inside bar traders triggered into the market. So we have shorts triggered initially. They've broken out and hit longs. That's the inside day trade setup, page 69 in the playbook. But we also have inside day traders triggered on Friday into the high of the week. So we broke out on Friday, triggered inside bar traders. So there's still potentially longer time frame traders with stops underneath. The market breaks out today on Thursday in the Asian session, continues to break lower before it doesn't take out the low of the inside day level. It takes out the low of Friday, the closing range of the week. So we've cleared out Friday's low of day level. They trigger new entry short, but pump up into lower level shorts on the day itself. Hour 1, hour 2, hour 3 into the 9 a.m. open. So remember, with indexes, metals, commodities, our 4-hour rollover is 1 hour different to currencies. So that 6 a.m. beginning is the beginning of a new 4-hour cycle, but we have 1, 2, 3 hours pinning to the high at the New York Open, going into the New York Open. So we have our 9 a.m. candle opening at the close of this pin to the high, the 3rd hour to the high of the day level. The breakout pullback into Friday, targeting thesis is we're in a market now in breakout. So whenever we're already in breakout, the minimum target thesis is 100% range expansion of the day that it's broken out of. So remember now also, just in simple terms, we have longs trapped. We have Friday, Monday, Tuesday, longs trapped above this level from Friday's breakout of Thursday's high of day level. We have inside bar traders in the markets. Thesis is continuing for the range expansion, targeting where is the money. Now, one of the most important things to understand on a setup like this, whether you get the trade setup or you're hunting this trade setup or you're, looking to trade this market or take this setup,
is to not counter trend this market because it's an ACB template. It is not coming back. So for traders who are trying to cherry pick and catch the low because they're staring at one 5-minute chart and they see the low of day level and they think, oh, this market's way out of range, it's got to go back inside. They start trying to counter trend it and they're going to get wiped out because this is an ACB template driven by other time frame traders. What do I mean by that? Higher time frames. This is a 1-hour chart. It could be 4-hour chart also. 4-hour chart, same thing, but we're using the 1 hour. It's very easy to see this template unfold. Day 1, day 2, day 3, breakout traders in the markets. First red day, lower lows, pump, 1, 2, 3 hours up. My friend Steven doesn't trade markets until they break out and not until the 3rd hour. Now this is a situation where this is an actual trend continuation trade, the low-hanging fruit. First red day signal with breakout traders trapped. We have 3 days of volume above that low of week level for the parabolic collapse. Heading into our New York Open, we have our universal entry criteria aligning us with the higher time frame template with even if we place our stop loss at or near the extreme, we still have a very low risk, high reward asymmetrical trade setup opportunity targeting the low of the previous week. 3 days of breakout traders and a first red day setup on the NASDAQ. I continuously repeat the phrase, what setup are you hunting? And I literally mean that. Which setup are you hunting? Because traders come to the screen every day, they're looking to take trades. Whereas taking 1 or 2 scalable parabolic opportunities that are ACB templates have the ability to compound your account, as opposed to catching a move and scalping this and grabbing that and positioning yourself in the market in a time window where the market is going to go on a range expansion, whether that's a reversal trade or a trend trade, and it's not coming back. It's driven by higher time frame traders, and it's going after the money. So I'll repeat the simplicity of just hunting easy money-making trading setups. They're profitable, highly profitable, zero stress, zero emotion. They're scalable in size. There's no analysis paralysis. You have, the close. You have days to find these trades, and 1 or 2 of these a week significantly outweighs these little 50-50 garbage swing trades. And there's zero stress, zero emotion. There's no analysis paralysis, fear of missing out. You only live once mentality. Essentially, you have to just hunt out 2 or 3 of these in a week and be patient enough to let them set up. And if one moves in a previous session or a different session to yours, you have a couple of others in your basket. And, it's so simple. Even if you get 2 or 3 of these a month, they compound your account quickly. And I repeat this, if most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Stepping back and let the higher time frame opportunities present. I'll just repeat this slide again. Most traders cannot sit on their hands. They don't really have an edge on most of the trades they're taking. They're 50-50, but they want to trade every single day. They want to get a trade, which leads them to over trading on poor quality setups on the wrong day. They'll become emotional, impulsive. They'll engage in irrational behavior. They get impatient. When they get behind the keyboard, they get impatient because they're at the screen. They want to get paid. They want to make some trades. And they end up engaging in degenerate gambler mentality and behavior. And they sabotage all the good results that they do get when they actually are in control on the right day and they do the right things. If you understand how to build your trading business with scalable opportunities that rinse and repeat, you will step back from all the jibber jabber gobbledygook and study the templates where it's easy to make a lot of money on. The behavior of the trader is the number one reason most traders fail. Build your playbook of best trading setups, whether it's one setup that you hunt over a basket of 20 instruments. Build your muscle memory on the different variations of those setups. Hindsight pays. Master 1 or 2 of these setups that rinse and repeat. Hunt them out on any instrument. Be patient, step back, allow the templates to unfold, and understand that chasing movement is what blows out trading accounts. Little 1-minute swings here and there will eventually lead you into a self-sabotaging, account-destroying self-destructive day. So in closing, my modus operandi is trading less with bigger size. Take a few trades with more size. I don't want to take a lot of trades that are 50-50 on 1% risk. I'm looking for the scalable opportunities that rinse and repeat. Zero stress, zero emotion, and for the most part, zero management, zero thinking. Keep it simple, traders. Keep it simple. Have a great day, and may the markets go with you.